First of all, I just want to thank everybody for coming out. It's really terrific to have everybody here. This is a really, really exciting movement. And our hope here is just to help you understand kind of how we're seeing the possibilities here. And then obviously we want to get you excited about what resources that we're putting to bear on the Ripple protocol and how we can help you kind of build on top of this. Because this movement, this is all based on everything that you guys are doing. Our job is really just to, how do we get as many resources together? How do we build the protocol as flexible as possible? But it is really, we've got to get you guys interested in what we're doing. And we're starting to feel like the community is starting to roll here. So that's really important. But just really briefly, just to start out, our view of the world is that a real big thing is going on here, and it's not just about math-based currencies, but it's really this idea of building an internet for value that we really see kind of, whoops, okay. Oh yeah, there is Wi-Fi. So for you people waiting for the noon hour to buy your Burning Man tickets, you can buy them in the audience. We will break before the noon hour, I guarantee that. So again, this whole idea of building a payments web is really what we're trying to do here. So just again, the big picture, you're hearing obviously a lot about math-based currencies, Bitcoin, Litecoin, Dogecoin or Dogecoin, whatever we want to call it. Those are math-based currencies. What's going on there is that the world has now figured out how to build a currency without a counterparty, a currency that can't be debased. And that is really cool and groundbreaking, and it's going to absolutely change the world. But at the same time, that same technology now is enabling the world to build basically an internet for value that we really haven't had before. So at the same time these things are math-based currencies, they're also real-time distributed payments protocols. And that actually provides, we think, kind of more opportunity for developers than even the math-based currency part. That just changes everything that touches finance. So we should be seeing the same revolution in value exchange and finance that we've been seeing in information exchange. Kind of for the first time, that's now possible. And Ripple, we think, is well positioned as a protocol to do that, because the Ripple protocol is value agnostic. You can put anything of value in it. You can put Bitcoin in there, airline miles, dollars, euro, yuan, gold, make up anything of value you think is important, you can put it in there. And it's also real time, so it settles instantly. So we think those are two really important features that make this protocol really useful for development. So again, we think the real key thing here is that the math-based currency thing we're all hearing about is really just the tip of a huge wave that's coming. So again, what do we mean? Again, put a finer point on that. What do we mean by a value web? Again, until now, you really could not architect the exchange of value like we've been seeing the exchange of information. We've had 2 decades of the information web. The world is wired together, sort of mission accomplished on that. But when it comes to exchange and value, this is all pre-internet until now. All of our systems basically, look like this. It's just country by country. The U.S. isn't, talking to Europe. Europe's not talking to China. China's not talking to M-Pesa in Kenya. So this is a huge chronic problem, because it means that, moving value around Earth, it's really slow. I mean, we're kind of excited when we see 24-hour settlement systems. That is totally going to be seen as crazy 20 years from now. And, super expensive. You even have some of the biggest institutions paying wire fees. And, the stuff that consumers have to pay in the developed world is pretty outrageous, pretty expensive, pretty slow. Talk about the developing world, sometimes it's not even available. So again, the world has not been wired together on a value web. It needs to be. And that's really what we're trying to do with the Ripple protocol. Again, the same technology that allows you to build a math-based currency without a counterparty, is a technology that allows you to do what we think, it seems so obvious, that globally anything of value should be sent to anybody else, anywhere in the world, instantly and basically for free in a free payment rail. And that all those tools should be available to any developer to build on top of, just like all the tools we currently have on the information web that are available to anybody, to any creative mind, anywhere in the world that wants to build something. So that's really what we're trying to do here. So with that, I'm going to kind of turn it over. I think next we're going to have a panel. Is that right? So we've got some really awesome people that were involved in the very earliest days of this whole movement, both with Bitcoin and with the Ripple and with all the really cool things that are going on here. So with that, let me turn back over to Ryan, and we'll get this cranking away. Oh, was there any questions, by the way, before we started this part of it? There'll be time for questions as well on the panel we're going to do and throughout the day. All good? Okay, great.
Thank you, Chris. Panelists, please join us. So, handling the moderation duties of the panel today, we have Dan Held. He's the co-founder of ZeroBlock. Hope you guys all have that app installed on your iPhone or your Android. It's pretty awesome. You can see all the crazy Bitcoin price fluctuations of recent weeks. Been keeping up to date on that. So with that, Dan, would you like to introduce the panel?
Yeah, we have Jesse Powell, the CEO of Kraken, a Bitcoin and altcoin exchange. We have Chris Larsen, the CEO of Ripple, Ripple Labs, which is a digital cryptocurrency. We have Tom Longson of GogoCoin. Then we also have Jered Kenna of TradeHill and the Money in Tech. So I'd like to get this conversation started. This is the What's to Come in 2014 for Digital Currencies panel. And the first question I'd like to pose, and we'll start with Jesse, is how each panelist got started into cryptocurrency and how you got started with your current business venture.
That's a kind of a long story that goes back about 13 years. But prior to starting Kraken, I was running a company selling virtual items and currencies for online games like World of Warcraft Gold, Magic Swords, and Diablo. And I just read about Bitcoin in March of 2011 and realized that it solved a lot of problems that we were having with payments in that space. Just fees on microtransactions, chargebacks, kids not having wallets, not being able to pay international suppliers. Bitcoin solved all those issues, and I knew that people were already spending World of Warcraft Gold on real life services and goods. So Bitcoin just made a lot of sense to me. I had a feeling that it was going to be a huge deal, and I was sort of looking for something else to do anyway. I had been in that business for about 10 years, and Bitcoin just seemed like the right thing to get into. It was exciting. It was going to be world changing. So I left my last company to start Kraken. And at first we had a couple ideas of what we wanted to do. We did a mining pool. We were considering doing something like a Coinbase, but eventually settled on the exchange when we realized that Mt. Gox, after the hack in June of 2011, that probably there should be some other exchanges. So we just got to work on the exchange, and here we are now, a couple of years later. We're working on adding more coins. We're working on adding our Ripple gateway. So there's a lot of room to grow the space. Obviously, it's growing very quickly, and we're just excited to be in it.
Chris, go ahead.
Sure. So before Ripple Labs, I was running a company called Prosper. It was a peer-to-peer lending marketplace. Did that for 8 years. And then before Prosper, founded and ran a company called eLoan for 8 years. It was a publicly traded online lender. So it's kind of the third fintech company. But for the last 10 years, I've been keeping this box of sort of virtual currency box because it just seemed obvious that the world needs a global currency. And then when I stepped down from Prosper, I met actually Jered at an event. We started having some discussions about where this is going to go. Jered was kind enough to introduce me to Jed McCaleb, who was the guy who invented the Ripple consensus technology, which is pretty awesome. But I think it's kind of what got motivated us, I think, was the frustration with fintech companies that until now always had to beg the incumbents for permission to do anything. And I think that's a really big change right now. If you actually have a kind of a protocol for financial services like HTTP for money, that actually frees up developers and entrepreneurs to build without having to get permission from incumbents. You certainly need the incumbents to build out more utility, but you don't need their permission. And before you did, so like a Prosper eLoan had to beg for like bank charters, and it's a huge, huge block until now on innovation in fintech. So that was, I think, what's most exciting. And then I think as we developed, I think Ripple Labs, we morphed from focusing on the Bitcoin aspects of a new currency, and again, have really embraced this mission of building a kind of universal exchange protocol. That's really, again, what we're focused on.
Tom?
So I started getting into fintech about 6 years ago. I worked for Wells Fargo, and I started off on a dumb little app, and then was moved into working on their most profitable business-to-business app, which was basically credit cards for companies. So if you were a Fortune 500 company and you needed 1,000 credit cards in order to basically serve all your salespeople, this product did it. What really surprised me, though, was that this product made $500 million in profit per month. And I realized that fintech is maybe boring, but it's what moves everybody, and that these are huge, huge systems in place. And what I was working on was a lot more important than I first gave it a chance. And so moving from that, Bitcoin didn't exist at the time, but I went to work for Sony, and they're working on their digital entertainment store, and found there'd be a lot of parallels between money and goods, especially when it came to digital goods. And in 2011, I learned about Bitcoin thanks to Senator Stevens, and basically the big pushback against Silk Road. And I realized that Silk Road was just a particular marketplace that had used Bitcoin, but there was no reason that it couldn't have used any other particular virtual good, and that Bitcoin itself was a big deal. And so I did a couple things. I convinced my wife to start accepting Bitcoin in her cupcakery on 9th and Harrison. We were the first retailer to accept Bitcoin, and it's for cupcakes. And it was like the exact opposite of Silk Road, which was really my intent, was to show that it was a legitimate thing. And since then, we've had a lot of press, Wall Street Journal, Bloomberg, BBC, the list goes on. We've had just so much press from it. But I also started a site called How Do You Buy Bitcoins, and started investigating this whole process of how does somebody actually start entering into the system, because it's not a simple thing. It's not like you can go down to your corner store and buy Bitcoins. If you're going to buy Bitcoins, you may be doing it through local Bitcoins. Coinbase didn't exist at the time, so basically trying to buy Bitcoins was a really hard thing. It's slightly easier now for Americans, but it was still a problem. And so I founded GogoCoin after I quit my job at Sony, because I felt like this was a wave that was happening, that I wanted to be using the momentum of Bitcoin and decentralized currencies, because it was really about the payments. It was about enabling people to send money from point A to point B without having to deal with the banks, and not having to pay huge fees, and not having to basically be nickeled and dimed in the process. So I started working on an entry-level system. Basically, these cards are GogoCoin cards. So this is our first iteration of Bitcoin cards, and we've been giving away these cards the last 4 months about, and they're each worth $5 and redeemable for Bitcoin. And the idea is that this can go into a liquor store, it can go into a discount store, it can go basically anywhere. It's the last mile for giving people access to Bitcoin. And really, it's not about access to Bitcoin, it's about access to cash, digital cash. And that's what's big. It's the fact that we can pay people all over the world now in a way that we've never been able to. That's revolutionary. That's the kind of thing that is disruptive, like Craigslist was to the newspapers. Digital currency is here to stay.
So I believed in digital currency and Bitcoin and Ripple before it existed for similar reasons to Jesse. I used to trade virtual items online, not at the level you did, but what really solidified it for me was the brakes went out of my car, and I traded a guy an amulet of Necropotence from EverQuest, which was like a $400 necklace, expensive pixels. And I gave it to his in-game character, and he owned an auto body shop, and he did like a $400 brake job, and I was like, cool. And it wasn't so much that it was pixels; it was a database entry. Was really what we were trading, And that's all money really is, anyways. After that, after the war, I moved to Chile, and I realized how hard it is to move money between countries when you're just doing a database entry. And part of that was, ignorance on my part. I realized later that it's actually really hard because of all the regulations and whatnot. And that's what Chris got to about we don't have to, cater to them. We just kind of do it, and they have to figure out how to adopt it. So I really believed in all that before it actually happened, the potential of it, you know. And then Bitcoin came along. I was really fortunate to find out about Bitcoin in the very beginning, and I was one of those people. As soon as they heard about it, they were just like, "Okay, I get it. I'm in." And then a year later or so, Mt. Gox was terrible, and it is now. And I thought we needed an alternative, so I launched TradeHill. And then next area that I saw that I didn't really like is the media. So now we're running moneyandtech.com. Our goal is to cover the news that the mainstream doesn't necessarily pick up, or they really kind of screw it up. I don't know if you read the New York Post article recently. That was great. So yeah.
Money and Tech is covering this, right?
That's right.
Yeah. So this next question is rather broad, but I'm going to break it down per participant. The question is, what's the innovation of Bitcoin, Ripple, and other altcoins, and how are they different from each other? And I'd like to start with Chris in covering Ripple.
Sure. So the big innovation here, in our view, of the whole industry, Bitcoin, Litecoin, Dogecoin, Ripple, is this idea of confirmation of financial transactions without a central operator. That's really the big thing going on. So whether that means a currency without a counterparty or a payment system without a central clearinghouse, kind of the same thing. So the similar innovation between Bitcoin and Ripple that's what we've enabled. We have a method that confirms financial transactions without a central operator. If you don't have a central operator, you don't need like a Visa or a MasterCard or ACH, then you can have a free payment rail globally that basically settles instantly. And again, that's the big picture thing that's going on. The thing that's different about Ripple is the method we use. We use a method called consensus rather than Bitcoin's method of mining. It's just a different technological approach. We use a peering system. Consensus is a peering system. Mining is a proof of work system. So how that kind of factors, or what you actually see as far as differences is it settles faster. So Ripple settles in about 5 seconds versus about 8 or 10 minutes in a Bitcoin protocol. And you'll see differences, obviously, in some of the other altcoins. The other key difference is you can put anything of value in the Ripple protocol. So we think that was core to building this idea of a value web. So again, it's completely agnostic to dollar, euro, yen, Bitcoin themselves, gold, airline miles, merchant reward points. And again, we see the world having an explosion of things of value. And what we're trying to focus is how do you then seamlessly trade one thing of value for another? How do you send this thing of value shows up as that thing of value? So in the middle there, of course, then you need a lot of attention on pathfinding algorithms. So probably the Bitcoin technology is probably most focused on that confirmation part. And Ripple, since there's more going on, there's the confirmation part, consensus. There's the pathfinding algorithm part, since it's a giant pathfinding algorithm to change one value to another. And then there's the whole trading order book part of it, so that anybody on Earth could put a bid ask on anything of value within the protocol. So all three of those are actually really complex, but I think provide a lot of material for developers to develop on. You can do a ton of stuff if you can just pulling all those things together.
Thank you, Chris. Jesse, would you like to cover altcoins? I know you have a few on your exchange.
Yeah, what do I think are the innovations that other altcoins offer?
Yeah, some of the ones that you have on your exchange. Pick one or two.
Yeah, so we do Bitcoin, Litecoin, Namecoin, Ripple, and we added Dogecoin this morning. They all have interesting things about them. Litecoin has script mining. Other than that, I don't think there's anything particularly interesting about it. Namecoin I like a lot. It's probably my favorite altcoin because it has the distributed domain name system built into it, which I think is really valuable, and it's underused, and they had some trouble with the way that they launched it, I think, and there was a lot of domain squatting. But there seems to have been a revival in the developer community for Namecoin recently. Dogecoin, I don't know that it offers a lot other than it's funny, and it seems to have an insane user base, and it's growing like crazy, and they've got like 60,000 subscribers on Reddit now, and the community is just exploding around Dogecoin. But other than that, I mean, like technological innovations, there hasn't really been, apart from Ripple, which is significantly different. I mean, Ripple's not a Bitcoin altcoin. These other ones that we're supporting are just alts of Bitcoin that have minor tweaks. And I really feel like Namecoin is the only one that actually offers something valuable, and that's the domain name system. And I hope that they figure out a way to do that better, or that somebody else comes along and does that same thing, because I think that's a valuable service.
Okay, cool. Thanks, Jesse.
Yeah.
Jered, just kind of covering all these alts and Ripple and Bitcoin, what do you think generates value for these currencies? What makes Dogecoin valuable, and what makes Bitcoin valuable?
I mean, Bitcoin's valuable because you can actually do something with it. There's actually utility now. I mean, even 2 years ago, I used it to pay a guy in Europe, and it was cheaper than the bank. Now it's like BitPay's probably got, 12,000 merchants, Also, there's a lot of, if you speculate with Bitcoin, there's actual liquidity to it. So even, you can do $1 million trades and not, they'll clear. Also, I think people actually believe Bitcoin's going to succeed now. Years ago, it was a lot less certain. So that definitely adds a lot of value to it, especially on the speculation side. And I think the one thing that really separates these coins is Bitcoin has the most market share, and it's the most entrenched in the network effect and all that, which is obviously extremely helpful. Dogecoin is just cute as hell, and it's growing like crazy. And I don't know, it's fun to watch. But what Ripple's really good about Ripple is it's a lot more flexible. When I talk to banks and whatnot, they're always concerned about money laundering, KYC, know your customer. They want to know that everyone trading is who they say they are. Nothing illegal is happening, because that doesn't happen with dollars. And I always talk to these banks, and they go, okay, you know who your customer is. But what if they trade with someone that trades with someone that trades with someone that buys Coke, or like a terrorist? And do you go through that process when someone withdraws cash from your bank, or sends a wire? But with Ripple, you could actually do that. So I think, the super hardcore crypto anarchists would call it like, giving into the government or something like that. But I think realistically, I think the Ripple protocol allows you to have much, much more control. And we could make it so, only people on your site that have been verified can trade with people on your site, et cetera. And I think that's something that's really going to help advance Ripple that Bitcoin and other currencies haven't really grasped yet.
Thanks, Jered. Tom, kind of like how Jered highlighted, there's a split between cryptocurrencies now between kind of the anonymous side and the open, legal, regulated side. Where do you really see that division happening? And what are your personal beliefs on that?
Well, it's an interesting thing, because Bitcoin is, and all currencies in general have been fueled a lot because of gambling. And so you can take basically you have to take a approach where you feel that something's correct or not, and ethically, morally, policy-based. Essentially, how I see it is not as much as should it be anonymous, but are you working with people that you want to work with? And so with the Bitcoin community, it's been a very interesting process of learning kind of what people are doing and how they approach the network. As far as Ripple and Bitcoin go, I think that there's going to be a lot more development in terms of trackability of coins, because that's a big concern for people, especially when it comes to theft. Anti-money laundering is probably the bigger issue, but people, they want to be able to have a sense of where their money has gone. It's kind of like Track George, or Where's George, I think it is. Very popular. And, it's interesting to see money move. As far as the alts go, I think there's I'm interested most in Litecoin, Bitcoin, and Ripple, because they all seem to have something that's slightly technically different from one another. Litecoin, for example, can do 20 transactions per second, whereas Bitcoin can only do 7. Ripple is a very, very different system. So it's kind of like looking at what happened with Napster and how they were a very centralized system. And when they got closed down, basically BitTorrent was born by Bram Cohen. And while that's evolved somewhat, it's still being very much the de facto way to send files online. I think that with Bitcoin and Ripple, what you'll find is that the best technologies for the situation will kind of arise, and that Ripple will serve very different needs than Bitcoin potentially.
Thank you. Starting with Jesse, what are some of the most interesting digital currency projects outside of these alts, kind of like the colored coin sort of projects, like Ethereum, Mastercoin, ProtoShares? What are your views on that?
Yeah, there's a lot of interesting stuff happening. I mean, Ethereum's gotten a lot of hype lately, but it seems like they're still very, very early. Like they're months away from even having software ready. And I think it's the same for colored coins. I mean, the concept is there, Mastercoin as well. There are a lot of interesting initiatives, and there are a lot of things that you can do on the Bitcoin blockchain that have yet to be explored. But these projects are all really early. I think it's, there are some competing for to do the same things. Whether there will be a clear winner, I don't know. But I think that going forward, there will be more things built on top of the blockchain. We'll trade securities on the blockchain. We'll use tokens, Bitcoin as tokens of authenticity. We may use you may be familiar with smart property. So there are a lot of things that Ripple actually does today that people are trying to build into the Bitcoin protocol. But I'm skeptical that Bitcoin is going to be able to do those things better than Ripple. Like, I feel like Ripple was built from the ground up to do those things, and people are just trying to hack these things into Bitcoin. And ultimately, I feel like Ripple is a better protocol to do those things. And I'm also concerned that when you start adding, like, the calculation that you do for like what it costs to do a double spend on, or like a 51% attack on the Bitcoin network. Right now you're weighing the cost against just what does it take? What are you potentially missing out on in terms of mining reward? But once you have all these other things built in to the blockchain, like you're relying on the blockchain for securities trading and all this other stuff, then the risks go up. Like, you have more incentive to try to attack the network, because not only are you having an effect on the Bitcoin that may have been spent in the last block, but all these other securities that might have been traded as well. Yeah.
Thank you, Jesse. Chris, can you kind of expand on Ripple and some of these different types of contracts potentially? Have you guys explored? Have you guys started putting contracts into Ripple yet?
We're working on contract system. So I think Stefan's going to talk. Our CTO is going to talk about that as well. And again, Stefan is, I think, probably one of the top guys in the world who thinks about this. Has been obsessed about contracts for as long as he can remember. So that's definitely coming, and we think that will provide a ton of additional kind of use cases and utility to these protocols. So it's really exciting stuff, and probably don't have to rehash all that here, but we can take some more questions on that when Stefan gets up.
Any other advanced type of assets that you can transact with using Ripple?
So there's some pretty cool stuff coming, or that's already come on board. So Ripple Singapore, for example, it's now allowing gold, platinum, and silver on the Ripple protocol. So you can buy that today and settle there, and they've got a neat system. So that just came online. No fiat coin is also doing some pretty cool stuff with gold. There's another gold provider coming. So seeing a lot of now commodity things of value coming onto the network, which is super awesome. I mean, eventually what you'd like to see is somebody who wants to hold gold or platinum can just hold that. And then when they want to spend it, they're just at somewhere in the world, either with a mobile phone or with swiping a card. That value is just going seamlessly onto that device and being turned into whatever that merchant wants, and probably in a way that the merchant doesn't even know you care about gold, held gold, or even paid with gold. I mean, that's the ultimate vision, I think. Seen some pretty cool stuff in remittance. So we've seen some providers in Ethiopia and Philippines that are building products. So a ton more stuff coming out on that. There's just a shopping plug-in from a merchant in Spain who is giving like a 5% discount on jewelry if you pay with XRP. So that's pretty cool, just to reflect the savings and fees that they get. So starting to see the ecosystem build, and I know there's a ton of more developers building stuff here. We're really excited to see what's coming.
Thank you. And Tom, what do you think that with Ethereum, Mastercoin, ProtoShares, Ripple, Do you think there's going to be one clear winner? Do you think there's going to be several operating at the same time? Or
It really comes down to what they're providing explicitly. To Jesse's point, Namecoin has an advantage in the sense that it's trying to solve another problem with DNS of like basically being able to provide value in terms of namespace. Bitcoin is really focused on being able to be a distributed ledger. It's not clear to me if there's going to be a winner as much as what people are trying to do explicitly and which platform serves that the best. I think that Ripple has a lot of potential because it's really a great payment network. It's faster than Bitcoin in that sense. It's being reliable. And that's really what it comes down to is, do people trust in these systems? So right now, people have a lot of trust in Bitcoin, but that may change if there's a major vulnerability. I mean, it's really hard to tell if something's going to be successful long-term and what might shake up people from using that system and going to another system. I mean, you really have to look at it like Friendster to MySpace to Facebook. It's about serving people's needs the best. It's not just about having the best technology.
Thank you. Jered, what's the most interesting digital project that you see?
Well, I mean, when I look around all the different digital projects, like, I mean, are you talking about like protocols like Ripple and Litecoin and Dogecoin and all that?
Yeah, the higher up ones like Ethereum.
Okay.
Yeah.
Yeah, I mean, I think I look at like Ethereum and Mastercoin, and I look at it and I say, like, why would you want to work on that and build that when you've got Ripple, which already has an amazing team, and I guess their claim is that it's centralized, and whatnot. But so I'd say, I mean, I guess it's a Ripple dev thing, so I don't want to feel like I'm plugging it too much. I'm not biased here, but Ripple for sure. I think it just offers so many things that are already built out that why would you put your time into Ethereum and Mastercoin? But I think it brings up a really good point that there's a ton of low-hanging fruit right now. And this is like the early days of the internet. Basically, in the beginning of the internet, anything you put up there made money. And it was like, oh, you could do this in real life, do it on the internet, make money. And I think we're seeing that with digital currency. Now it's like, oh, you can do that with dollars? Let's do it in Bitcoin and Ripple. So I think we're just going to see, everything that's not taken is going to be jumped on in the next year or two.
Starting with Jesse again, Bitcoin has experienced a lot of turbulence the last couple of weeks, including the company I work for. We had our iOS app pulled. What's your take on the recent challenges that Bitcoin has faced here, and especially with the transaction malleability issue?
Yeah, the transaction malleability issue, I don't see that as a problem necessarily. I mean, it's been known that the transaction IDs are malleable for years, and it's sort of a side effect of being able to do other things in the blockchain. And so it was more of a feature than a bug, I guess. And I think Gavin described it as a quirk. And it's only a problem if you don't plan for it. I gave this analogy to a reporter that asked, it would be like you need to come up with a system of quickly valuing like a pile of coins that you have, and you might just do it by weighing them all, since all the coins weigh differently. And then at some point you might get to a coin that is foreign or fake or whatever, and it screws up your whole system. But you should have thought of that ahead of time, right? Like, other things might clutter your pristine like coin pool. So if you thought of that ahead of time, then you wouldn't be relying on the weight of the coin to determine the value of it. You would be doing other things, like maybe the weight plus you're scanning it plus you're doing chemical testing on it or whatever. Like, there are other ways to do it. So I feel like people should have been better prepared for that. It was known for years, and you had years before it really became a problem. Specifically to the Mt. Gox issue, it seems like their problem was not just that they weren't prepared for transaction malleability, but the way that they were handling claims of like missing transaction was probably not very robust either. Like, they may have just been resending payments rather than saying, hey, actually we spent those coins. Why are we asking to have them sent again? So I think that problem is going to sort itself out. Like, honestly, I can't imagine that Mt. Gox is insolvent with the fees that they've collected over the last few years. I mean, they've got to have like hundreds of millions of dollars in Bitcoin. So unless they somehow manage to let that slip away, like they've double withdrawn $100 million worth of Bitcoin without noticing, then I think that they're probably fine, and it's just going to be another week or two before they come back online. And then the issues with the blockchain app and the ROI store, honestly, I was surprised that it lasted so long.
I agree.
I think Apple's going to come around. It's just going to be a matter of time.
Cool. And Chris, how is Ripple different than Bitcoin with some of these challenges? I know Mt. Gox problem with Bitcoin is that Bitcoin is decentralized, but we have centralized exchanges. How does Ripple help solve that?
Mm-hmm. Yeah, just to piggyback on what Jesse was saying, that was definitely a action-packed week, but there was like a lot of different things going on. The Mt. Gox thing seems completely different than the malleability thing, which again I agree was just a quirk everybody knew about. I think it showed Bitcoin rallied, around the problem. I think the whole thing makes Bitcoin stronger and makes Ripple stronger too, because we actually learned some things by what was exposed, and we think that was a potential exposure in Ripple as well. One that probably couldn't have been exploited, but yet we learned from it. So I think the entire industry learns from these kinds of things. It makes all the protocols stronger. Totally separate from the Mt. Gox stuff. I think that's a special case. So yeah, I think it's just part of the growing, but it just kind of highlights again how the open source systems are better systems. You have more eyes, you have more brains kind of on these problems. And I'm sorry, what was the, you had another?
I was asking kind of how Ripple is a little bit different than Bitcoin. It's because you guys, you have a different exchange model. Again, kind of the key thing we're trying to do is put the exchange in the protocol itself.
So you do have counterparties. So, anybody that's bringing on a thing of value like gold, for example, like airline miles, like dollars, any currency or anything of value that has a counterparty, you will have counterparty. There's no way to escape that. So that's going to be true in the existing financial system. It's going to be true in these new financial systems. That said, though, we think putting the actual bid asks that are available to everybody rather than sort of like we've seen, you sort of get the bid asks in Mt. Gox are sort of trapped and are weird. And if you look at the prices today, it's obviously, how do you value a dollar that can't be taken out, exchange for a Bitcoin that can't be taken out? It's weird. So having it all in the protocol means that you can have the algorithms find the path through all of the offers rather than getting stuck in sort of like a Mt. Gox kind of thing. So we think that's, if your design objective is a payment protocol, we think it has to be that way. And then of course, then we also have a difference in, we don't have a blockchain, but we share this notion of a global ledger. That's, I think, common in all of these systems. A global ledger that the world is sharing that all has to figure out, has the state of the ledger changed since the last time it was updated? All of them share that general notion. So in that way, even though the systems might be different, we all kind of learn from each other by watching, how these things develop and get attacked. The other thing that happened last week, by the way, was just a massive denial of service attacks across the industry. I think it was not just the math-based currency industry, but Kickstarter got hit as well, and it seemed to be really broad. And I don't know what's behind that. We're trying to, investigate it as well. But so there was like a bunch of stuff happened last week.
Tom, what's your take on recent events, the recent challenges?
Well, it's really interesting because it wasn't that long ago that a denial of service on Mt. Gox would cause the price to fall. And it changed because people started realizing that this was a thing. It wasn't that the price was falling because of something that was to do with Bitcoin, but because of Mt. Gox as a centralized service. And the reason why the price there is 200 something right now is because basically people are saying, well, I don't want to deal with Mt. Gox anymore. I'm willing to sell it, and whoever wants to buy the bet that they're going to be able to withdraw again can do so. So basically, it's all faith based on Mt. Gox at the moment. So really, when it comes to the situations that have been happening recently, the malleability bug obviously is a concern for anybody who's running a wallet-based service, who's sending out money. But it's not the only problem that can exist with those types of services, and it's definitely a solvable one. I mean, I've been very impressed by the community in general to deal with it. I've seen problems with other services too that are completely unrelated. For example, with Coinbase, I had transactions double sending, I want to say about a year ago, and it was all rectified by the company, thankfully to Brian. But literally, it was a case of where they were sending out money twice because part of their system had failed and wasn't reporting that it had been sent. So that was a huge vulnerability for them. And these are the kind of things that can happen when you're running a money-based business, and you need, like Jesse said, you need to plan ahead for these kind of scenarios, and just be aware that they exist. You're dealing with assets, and it's very valuable. It's high risk. You've got to take it into consideration.
And Jered, running a Trade Hill, do you think Mt. Gox could have done something different, or do you think this was a preventable issue?
I mean, Mt. Gox should have done a lot of things differently, and I mean, it's like it's been said, people have been aware of it since 2011. We did something completely different, and without going into too much detail, it wasn't that hard to make this to get around this. I mean, like Jesse, you guys basically just reviewed your practices, and you're like, okay, we're good, right?
Yeah, I mean, we were totally unaffected by the transaction malleability problem. So we were actually surprised to find that others were having a big problem with it.
Yeah, I mean, when I read about it, I was like, this is a problem. I mean, what do we? It
was on the wiki pages in 2011, right?
Yeah. And the thing is, basically, when you see that someone claims they didn't get their transaction, there's a few different ways you can deal with it. You can look at the transaction ID, but that can change. Or you can look at the address, and you can just basically check, I sent it from this address, it went to this address, it's this amount, And it's not something that comes up a real lot. Trade Hill 1.0, I think 30,000 customers. I think I dealt with it like 10 times, and I just manually checked it. Trade Hill 2.0, it didn't happen at all. So they could just manually look into it as well.
Yeah, I mean, couldn't Mt. Gox have seen these massive amount of,
Well, I mean, if you're worried about the insolvency, like I would hope that they notice someone pulling $250 million out. I mean, if they don't have systems in place and circuit breakers and alerts and secondary authentication things for transactions that size, I'm really concerned. But like Jesse said, like I think they'll probably recover from this. The things that they've recovered from in the past, it's pretty ridiculous. So they're pretty resilient, and they like to keep plugging away at it.
Thanks, Jered. And our final question here, which I will let Chris answer last, but I'm going to start with the other guys first. Jesse, what is your advice for developers who want to build on top of these digital currency protocols?
Well, there's a lot of advice.
I know there's a lot, but
I would say the most important thing would just be don't get in over your head with security. Like they're trustworthy wallet services that you can outsource that to. Like, don't hold on to coins if you're not a tip-top security expert. I think we've just seen over and over that people who have done like a 3-month like dev boot camp and have 2 weeks of Ruby coding experience decide that they're going to launch a Bitcoin exchange and hold millions of dollars, and that hasn't turned out so well in the past. So that would be my best advice, is just don't take unnecessary liability for yourself. And then beyond that, it seems like, at least in the United States, law enforcement is getting more strict about cracking down on, it seems like almost anybody is just 2 hops away or less from some coins that touch the Silk Road at this point. So, if you're thinking about just launching an unlicensed money transmission business, just maybe think twice about that, or at least you want to be knowing your customer.
Thanks, Jesse. Tom?
It's a lot harder than it looks. Really what you're looking to solve are multiple problems within the space when it comes to policy, when it comes to security, when it comes to just building a product that people want. It's a tough proposition, but there are a lot of rewards, obviously, and so that's why we're all interested in this space, is because we recognize how powerful payments actually are, and that this is very, very disruptive. So start small, do things where you don't have a lot of liability, where you're not obviously flaunting the laws of where you're working, and fail fast.
Yeah, I think there's a few key things, and I think it really depends on who you are and what you're looking to do. If you and your buddy know Ruby and Python and JavaScript and you want to build something, that's a lot different than a guy like Jeremy Allaire entering into the space. So I'm kind of speaking to the typical startup guys that are building something. In my mind, the key principles are keep it as simple as possible. Try to avoid anything that's highly regulated. I would also, another rule that goes with that, do not start an exchange. It sucks. Avoid all liabilities possible. If we look at Coinbase versus blockchain, if Coinbase's website gets hacked and keys are stolen, you're going to have 1 million, maybe it's that many now, I don't know, angry customers with maybe $1 billion in debt coming after you. If blockchain gets hacked, they have encrypted backups of the keys that no one can do anything with. The customers actually have the keys. And it also goes with lowering the customer service liability as well. If something goes wrong at Coinbase, they have 1 million customers, and I'm not trying to hate on Coinbase here. There's advantages to doing that as well if you can pull it off. But they have 1 million angry customers that have all their files on there that they have to deal with. Blockchain can just go, hey, you have your stuff, figure it out. I think, but mostly definitely just avoid anything, like I said, that's heavily regulated. Lawyers are just insanely expensive. And you need way too many of them. And in this space, they charge you $20,000 or $50,000 for letters and things like that. And it's just insane. And also raise way more money than you think you need. And don't be greedy about giving away good chunks of your company for it.
And Chris, what's your advice for developers, and what resources does Ripple have to help developers build on top of the Ripple protocol?
Sure. So first of all, on the last one, so we now have 40 people at Ripple Labs, and most of those are in development and are just here to help people who want to develop on top of the platform. We're coming out with a ton of developer tools. You're going to start seeing that, watch in the next couple of weeks, some really good announcements, and also some really key partners that will help expand what developers can do. So again, it just provides more utility, more opportunity for devs. We also work a lot on the regulatory. I'm actually pretty optimistic about the regulatory. So I know this is the early days and things are starting. I would just say in fintech generally, you have to just sort of race in. Certainly be aware of the regulatory, but you can get crushed by it if you're kind of waiting for everybody to say yes. And it just doesn't kind of work that way. You kind of have to race in, and certainly if you get contacted, definitely work with regulators, work with whoever you need to work with. But I'd say just don't let it intimidate you or slow you down, especially with these new protocols, which are open. So it's really exciting stuff. We've got to keep pushing forward. And then on kind of the advice, I would just say keep it simple for sure. If it's a consumer product, as you got the 8-second rule, people have to figure it out in 8 seconds. Just got to reiterate, iterate to get words out, steps out, and all that. I love the Y Combinator advice. Try to please the first 100 rather than trying to race and get 1 million. If you get that first 100, super happy. That's a really good first step. I'd also say though, don't ignore the B2B stuff. These protocols are really useful for a ton of huge value that's being wasted between businesses, whether it be even between banks or institutions globally and between merchants. So a lot of times we think consumer only, but these things are much broader than that. And there's so much value being traded kind of behind the scenes. You can make really powerful, very valuable development tools for the people we kind of they're sort of invisible, but are moving tons of money and value. So that's probably what I would add.
Can I just follow on that real quick?
Sure.
The B2B is actually a lot easier from a regulatory perspective. You've got a lot less to worry about. There's all sorts of insane consumer protection laws that don't apply to businesses. And so I think that is a really huge untapped market. It's a lot easier to penetrate than the retail consumer B2C side.
Thanks, guys. That's all the questions I have for now, but we're going to open up to the audience, I believe.
Yeah, we got 2 mics up front, so thank you guys for that great discussion. Please come ask some questions to the panelists if you have them. Oh, come on.
know you mentioned earlier there were some low-lying fruits hanging out. Maybe if you could elaborate a little more on that. I mean,
should I go for it? So I think there's some things that are relatively simple. You know, like if you look at payment processors compared to exchanges, that's a lot easier. Remittance is fairly simple, but I think basically there's a lot of things like explaining how it works, getting people their first coins, basically anything that you can think of that doesn't require someone to go through a massive process. Like Jesse, you got any other suggestions? Sorry, I didn't think that one through as much.
Yeah, low-hanging fruit. I think, well, like Chris said, the easier things are going to be B2B stuff, right? Because you can just be like a software provider to those guys to replace some archaic, inefficient system that they already have. And I think the Ripple IOU network, like for settlement, does a lot of that. You just need to help these guys like hook it up into their legacy system. But honestly, on the retail side, on the consumer side, there are a lot of interesting things that just don't have to do with payments at all that I think would also be easy from a regulatory perspective.
Right, and also when I say low-hanging fruit, I mean relatively low-hanging fruit. Like the highest level would be exchanges and things like that, wallets where you're holding people's money, things that are both technologically and regulatorily complicated. Anything where you're not holding their coins is just on a separate level. If you can do something in Ripple or Bitcoin or Doge or whatever that doesn't involve touching the money, then that's ideal.
I think there's two things. So one thing is in the United States, it's really clear now that you can sell things for digital currencies, distributed digital currencies. So basically, that is a big deal for companies like BitPay and Coinbase, but it's also a big deal for retailers who are trying to get into the action. Overstock, Tiger Direct, these people are winning big over accepting Bitcoin, and I think there's a lot of opportunity there to kind of expand that world and to make it more useful. Maybe it's just about having better merchant processing tools. Maybe it's about having a better way to scan a QR code to get an address or something like that. It doesn't have to be revolutionary in the exchange sense, but I think that the biggest thing with that's overlooked is the fact that America is not the whole world. There is a huge group of people around the world who are unbanked, who are looking for solutions for payment, and address those people's needs. It doesn't have to. If the country that you're working in has too much regulation, maybe you should go somewhere else.
Yeah, I mean, if this is really about rewiring the whole payments infrastructure, again, it's a huge, kind of fundamental shift going on. You could pretty much, watch the PBS specials on sort of how your payment systems work globally, and kind of look at every step along the way, and kind of, okay, now, given you have this new thing the world knows how to do, could you kind of refactor how that is done, right? So this is you look at the amount of money flowing through our global payment systems, it's just staggering. So your business doesn't have to be tackling a very big problem to be a huge market. But more specifically, probably in remittance again, not just remittance, but each corridor is going to be fundamentally different. Philippines, the U.S., Mexico, U.S. are totally different markets. So it could be an application in just one of those corridors, for example. KYC and AML, know your customer, anti-money laundering tools for all the users. That's just an ongoing unsolved thing that will have to be solved. How do you do that in a way that provides the privacy for users, but the transparency for regulators? So there's a ton of tools that need to be built there. Security tools, like still how do you secure these digital items, bringing on new things of value. So one of the things you can do with Ripple is be a gateway in anything. So, this idea that like every merchant can be an issuer of currency because, their loyalty points programs suddenly become like altcoins themselves now that can be sent around. So kind of helping stores build, loyalty programs that suddenly are like global currencies. There's like a bleeding together of those things. I think it's kind of interesting. Tools for traders. There's so many now Wall Street traders and day traders that are into this space, but there's really no sort of E-Trade like thing that's been developed yet. And that industry exploded during the first trading boom, and that really hasn't happened yet. And Jesse's really tackling that, obviously with Kraken, but tons of tools that need to be built there. So it's just like a ton of opportunity. I don't know.
Yeah, I think the other thing to look at is that when I say low-hanging fruit, there's also things that are easily disrupted that you can really undercut or make much easier. Like if you look at remittance, it's on average they charge 10%, and that's a $500 billion a year industry. And then on smaller transactions, they get hit with sometimes 20% or more. With the digital currency, Ripple, Bitcoin, et cetera, you can undercut the hell out of that, hell of a lot easier.
And to comment on ZeroBlock as well, ZeroBlock wasn't the first Bitcoin price ticker or newsfeed aggregator out there. I think there's a lot of low-hanging fruit in redesigning interfaces to where it's simple and intuitive to consumers. I think a lot of these projects have been built solely by developers, and creating it easy to use for the consumer. I think there's a lot of applications for that.
Oh, thanks. So I had a question about how Ripple fits in with the blockchain-based currencies like Bitcoin. It sounds like it has a lot of advantages. The consensus mechanism is incredibly fast. It doesn't have the carbon footprint of having all those miners just cranking away at this SHA-256. And it sounds like for some of these next-generation applications of cryptocurrencies, there's Ripple has a leg up, and that there's a bunch of developers working on it, and it's sort of built from the ground up for that kind of advanced contracts and so forth. So I guess my question is there anything that Bitcoin and other blockchain-based currencies actually do better? If you took the Ripple source code back in time to 2009 and released it the same day as Satoshi, would there even be blockchain-based currencies?
Bitcoin is a successful thing of value now. It really said, I think its design objective was to build a global currency without a counterparty that couldn't be debased. It totally accomplished that. So again, it kind of serves this role of like a digital gold successfully. That, gold was cool because it couldn't be debased, no counterparty, but you couldn't move it around. And now you can. That's fundamentally what Bitcoin is. So it's just a different design goal, and it's succeeded. So again, Ripple is a totally different design goal. I think they actually complement each other very well, because you can now, if you can now put that, kind of successful, being adopted, just the beginning thing of value in a system where now it can be sent, you can hold it and you can send it, and it shows up as dollar, euro, yuan, and that person who received that thing of value sent doesn't even have to think about it. That just extends the utility and liquidity of it. So I don't think this whole space has to be seen as like one protocol will work, because they kind of all work in an ecosystem of multiple protocols, and there'll probably be others coming as well. So I don't know. It's just hard to say, but I think it has the blockchain has its very specific successful uses. They're just different from Ripple's design. I guess what.
Hey guys, what do you see as the fastest growing markets for digital currencies?
Doji.
What do you say?
Like in any particular countries or regions that are maybe faster than in the United States?
Well, I think you're going to see, like in places like Africa, like where the technology exists to accept digital currencies and the technology does not exist to accept Visa. I think in places like that, it could just absolutely explode.
The reason why WordPress started accepting Bitcoin was because not everybody has a credit card to pay for a blog. So where are those places? Can we address those particular markets? Where does Visa and MasterCard not have a reach?
Yeah, where not just that, but places where they may have a reach, but the population just doesn't have, is not trusted. Like in a place like Nigeria, for example, there might be tons of guys with credit cards in Nigeria, but you might not want to take a payment from any of them. So places like that I think have been disconnected from the financial world. This opens up an opportunity for them to engage in global commerce in a way that they haven't been before. So I think those are interesting targets. For us, as an exchange, our top markets are the United States, the UK, Germany, France, the Netherlands. It's mostly been Western countries, but I think that's just because these are the countries that have had access to Bitcoin. If you just want to buy $10 worth of Bitcoin and you live in Chile, it's probably not that easy to do. It's not that cost effective. There's not a local exchange that you can just go and give $10 to, apart from local Bitcoins probably, which is an amazing service that is actually giving access to everybody all over the world in ways that centralized exchanges can't do, just because it's not cost effective. Nobody has bank accounts in every country, and if you want to send an international wire, it's $40. So that sort of puts a minimum on the amount that you actually would be able to buy. I agree. I think it's going to be these emerging markets that haven't been part of the financial system we have now. I think we'll see them sort of leapfrog the Visa and MasterCard and just come online with the crypto space.
Yeah. I think you have to look at China. I mean, even though there were setbacks in December regulatorily, I think that's just the very first inning. And when you just look at the size of the economy there, if you look at how much innovation is clearly coming in payments, just the opportunity for where it is now to where it can go. And then also, if you just culturally, the acceptance of new financial things is just awesome there. If you look at P2P lending, which is obviously gets a lot of play here, crowdfunding, it is just nothing compared to what's going on in China. It's just unbelievable how fast that grew. And so I think you're just going to see incredible things there.
Thank you.
So we're going to take one more question, and then we'll get into a tech talk.
Hi, I just quickly wanted to hear your thoughts on ZeroCoin, the advantages of the anonymity versus making it harder to regulate, and any potential you see for that, and as far as on its own versus being included in Bitcoin.
If you're trying to run a business in America or any other country with a lot of regulation, it doesn't make sense to go after something that's clearly going to irk everybody and from a policy perspective. So if it's non-anonymous, if it's anonymous truly, as opposed to Bitcoin, which is pseudo-anonymous, you're really looking to piss off people. And I think that's what you want to avoid. So, maybe it's advantageous in different ways to the consumer, but if you're trying to actually build a company that's a business, that's going to be really hard.
ZeroCoin could potentially kill Bitcoin, just because if the regulators are finally comfortable with it and they go, oh, hey, now it's actually anonymous. That's like the only thing that they're holding on to. It's their only, angle that's working with the regulators, is that it's not actually anonymous, because it's not. And if it accomplishes that, I think it could be absolutely terrible. And then if that caused the bulk of the people to leave Bitcoin, it would be a death blow, because with all the ASICs out there and everything, it would be just too easy to control the market. So I understand why they want it, and it brings up a really good point that with Bitcoin and Ripple and whatnot, you actually, in ways, give up more of your financial, privacy than cash or even checks. Like if I accept a Bitcoin payment to my BitPay address for my hotel that I always do, anybody that's ever sent me money can look and go, oh, you've received $20,000 in Bitcoin over the last 3 months or whatever, which you can't do with a check or cash. But yeah, it's going to be interesting to see what happens with that and what the Bitcoin community really does with it. It's a pretty serious issue.
I think Jered is raising a good point. Now, Bitcoin, Ripple, kind of all the currencies in this space now are probably too transparent. It's true. So there actually needs to be a balance between privacy and transparency. I think you're going to get that, though. But I think the big difference here is just the philosophy of, are you trying to be private to marketers, or are you trying to be private to regulators? It seems like there's a big distinction between, I want privacy from marketers. I'm okay with law enforcement if they need, being able to, see the data. That's one thing. It's another thing to be private from both parties, both government and from marketers. It's just a totally different philosophy, one that I think will cause trouble. It will actually slow the adoption, because it's going to just, it will be a setback to the reputational risks that this industry is already trying to overcome.
I think some people may decide to make the trade-off of privacy, of having their transactions outside of the public view for the counterparty risk, like transactions that go through Coinbase. Coinbase knows about them, but at least everybody else doesn't know about them. So, but then you have the counterparty risk. And so I guess, what's that worth to you? And there are some tools to make your transactions on the blockchain more anonymous, or at least more obfuscated. But I agree with Jered. Like these are not tools that we as an exchange would use. I mean, we want to be as transparent as possible. Our pitch to the regulators is always that, look, this is like totally transparent. We can track all these people. We've got identities. You can see where the money moves. We just need to be on top of money laundering and helping law enforcement at this stage. And what happens 20 years from now when Bitcoin is a global currency, I don't know. But I think when we get to the stage where where it's actually a problem, where we see people mining the blockchain or for data and marketing to people, then I think maybe it makes sense to pitch that to the regulators and say, look, like this is obviously a problem. It's too transparent. We need to be able to anonymize the Bitcoin transfers in some way.
Right. Well, it's also an opportunity for privacy coin if somebody wants to make that. And I would much rather see privacy coin split off from Bitcoin, completely anonymous. You buy drugs with it, everything else, and no one knows what's going on. And if you want to deal with that, and if you want to try to bank it, go ahead.
Yeah.
And then keep Bitcoin the way it is.
Yeah.
And Ripple can do that. I mean, Ripple, you can set your own.
Thank you guys so much. Good questions. Can we get a big round of applause for our panel? Yeah. Awesome, Rick.